Hi everyone. Today let's talk about quality stocks and why they might be the new hotness, a new cycle in markets. Let's take a look at why they're signaling quality is back. And then of course we'll take a look at all of the long-term charts and see what the thesis is for the next couple of weeks. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So quality stocks might be back in business here soon. Why are they saying quality stocks? You can see they say these have taken a backseat. Most investors are looking for cheaper value instead, expecting them to rise alongside of the rebound in economic growth. But why should we be looking at quality, steady growth, strong balance sheets, top-notch management? This is kind of the Warren Buffett method, right? Look for these quality stocks. And you can see on the chart here, quality stocks tend to do better over the long term. All country worldwide stocks have kind of lagged. Blue being your quality stocks, they have done well on a percentage basis, but it seems like they haven't done super well recently. You can see here the black is quality in this case. On a relative basis, they've done quite a bit worse relative to growth. And is that about to flip? Are we going to see growth come back down a little bit? We'll see quality start to catch up a little bit, something to that effect. I think that is definitely a good and interesting thesis. This is basically how my dividend portfolio is built around strong ETFs, high quality, high strength dividend payers with strong balance sheets. But what is next for these stocks? They say economic pressure, global growth has been slowing, US momentum has been fading, there is global geopolitical tensions. They have also been building, which for these companies with reliable earnings and strong fundamentals, this should be an environment where these stocks start to benefit. Rising interest rates, these stocks are a little bit less interest rate sensitive, again, should be a positive for them. Also broadening out in technology starting to become a little bit more integrated in everybody else, not just those top tech stocks, the Mag 7 style stocks. Of course, those will still probably do well, but I do think there will be a little bit of a divergence here where you start to look for steady, consistent growth, looking for those top stock picks and what they are calling quality here. And really, when I think quality, I think strong dividend payers. Moving over to fear and greed, we finished the week at a 27, down from a 31. We did dip into extreme fear just for a moment there. You can see that extreme fear hit that, and then we ended up bouncing just a smidgen from there. It's going to be more like this, where you get a little bit of consolidation in extreme fear before kind of that bigger drop. I still think that's ultimately what we're going to see. Momentum into fear, strength into neutral. Breadth actually saw a pretty good bounce on the Friday. It doesn't show it here, but we'll look at it later. Put call ratio continues to elevate. You can see that kind of higher low pattern. It's been slowly downtrending. I think this is going to get up there over the next little bit. I think this will probably drift towards 0.8 to 0.9, somewhere in there before we end up bottoming. Volatility spiked up to that 28 metric, hit our price target on volatility and then pulled back. Could see a relatively short-term bottom, slight rally out, and then ultimately getting that lower low I do think is going to happen. Safe haven demand continues to be extreme fear, and junk bond demand continues to elevate here in extreme fear. Moving over to the AAII survey, you can see the bears came back in force this week up to a 46. Big number there, pretty big step up from the previous number as well. And the bulls got squeezed as we expected was going to happen. This previous survey was on the Thursday prior to that big drop off, and then this got pulled down. As you would suspect, this is a more normalized range on the bull side. 33, just a little bit below historical averages, and the bears a little bit higher than historical averages, and then neutral, a little bit squeezed here. Not nearly as high as it could go on the bear side, but there are definitely more bears in the market here now than there were previously. Moving over to seasonality, as you would suspect, this is still bullish here. We've been talking about it. Still bullish all the way up through the 23rd is what we're supposed to be, but it seems like we're getting more of a normal year in terms of price action, a little bit more sideways choppy up through that same kind of time period. So got a little rally out, a little bit of a pullback, a little bit more of that normal year seems to be fitting with what we're seeing in markets. Moving over to the seasonal calendar here, nothing for the Monday, slightly bearish here into the Wednesday. That's kind of what we're looking at, right? Looking for a little bit rally. Monday, Tuesday might reverse on that kind of lower high peak on the Wednesday, and then we'll see if we get that bullish follow through or not. I would suspect that we'll probably turn down midweek next week, but we'll see. And then not a ton on the calendar for this week, pending the government reopening potentially. Moving over to the earnings calendar, we have a lot of earnings this week, starting off with Netflix on Tuesday, GE Aerospace, Coca-Cola, Philip Morris. Texas Instruments, want to see how they're doing from the semiconductor side. Lockheed Martin on there. 3M for the staples side. General Motors, want to see how the car industry is doing. I'm sure there will be a lot of good data there. For Wednesday, we have Tesla, IBM, Thermo Fisher, AT&T. Nobody really cares about them. And that's pretty much it for the Wednesday. Not a whole lot on Wednesday. T-Mobile, Intel, Union Pacific for Thursday, Honeywell also on Thursday, Ford Motor. Want to keep an eye on the auto industry. And as a whole, I think they're a pretty good bellwether for kind of where the economy is going. American Airlines also coming out on Thursday, expected to post a loss there. Interesting relative to their partners. That's not very good, and that'll pretty much wrap it up for this week. So the heavy hitters, Intel, if you want to call them one, Tesla, of course, IBM, Thermo Fisher, and then Netflix, GE Aerospace, Coca-Cola, as well as Texas Instruments. Moving over to the economic calendar, not a whole lot here for the Monday or Tuesday, really through Thursday. Continuing jobless claims, initial jobless claims maybe on Thursday, pending the government reopening. 5-year tips coming in very, very low on the previous. Want to see that continue to come in low. 20-year bond auction for the Wednesday also could be interesting relative to my TLT position. And then for Friday, CPI for the Eurozone, potentially. We'll see if we get that data. Been not getting all of the data that we've been seeing on the calendar because of the government shutdown, but hopefully we can get CPI data for this week. The expectation is a flat number for the core month over month and a slight step down for the headline number. Want to see those year over year numbers come in flat or below as well. And then a little bit of soft data here. Global manufacturing PMI, composite PMI, global services PMI. Moving over to Max Pain. Max Pain is up here at 667, so a little bit higher than current price. You can also see the spike on the put side at 655. Don't expect to get too much below that. If we do end up seeing a little bit of a sell, 660 also has some puts there. Put call ratio came down a lot from last week. Obviously, it was third week options expiration, but the put call ratio was super high at like a 5.5 or something crazy on this metric. And then total options was about 3.5 million to 4 million last week, only at 500,000 this week. So expectation is that could give markets a little bit of room to fall. We were propped up by the options market last week, and then maybe this week is when we finally see a little bit of that follow through to the downside. Moving over to the charts, starting off with the SPX here, you can see it was up 1.7% after the big down week last week. Inside candle, so a little bit of a reversal style candle there, still holding that 9 EMA at 65.81, touched that zone and then bounced. The momentum continues to fade here. Got that RSI retest, so this is the concern, right? The breakdown, the retest. Do we get this roll to the downside ultimately? I still think that is likely the case. I don't know if it happens immediately or if it happens this week, if we start to get that bigger continuation lower, but this cycle seems like it's relatively done. You can see here, similar kind of setup. This was a more peak area on the RSI, hit that retest here, slowly started to go lower. Is this another iteration of that where we hit overbought conditions, got the breakdown retest, expecting this to kind of roll to the downside? I think that is the fair expectation, especially also that we did not hit that upper trend line. That was the target in here around 7,000 or so. Came up short of that area before we got the bigger sell here. It's not impossible that we get a continuation. You can see a week like that, 2.36% down. Next couple of weeks, we're still bullish. Same here, 2.4% down. Next couple of weeks could be bullish. Maybe we hit that peak level there, but the indicators here are signaling that we won't. And then to recap that short term, you can see the daily chart, that grinding price action right on the trend line, bearish momentum, bearish RSI, just waiting for this 55 to catch up over the next couple days. Probably early November, it starts to catch up in here, just kind of sticking with this trend. And then eventually we'll get a test of it, probably get that first bounce, and then that second will be the cut through in my expectation. Moving over to the Tasty charts here, you can see that upper band, hit that upper band, sold off. That's kind of the difference between this previous big leg down and this most recent one. The upper band has been resistance. We've kind of pulled off of there, consolidating right at that overhead resistance. 8 EMA continues to hold. That is going to be 656.20 this week. Tagged that last week, tagged it this week, bounced both times. A little bit of volume, interesting, seeing some volume coming off of that level this week. Maybe we get a little bit more bounce, hit that upper band one more time. If we were to do that, that would be 675.75. That would take us back into bullish conditions on a lot of the shorter time frames. It'll be interesting to see if we get that kind of follow through off of that level similar to this here. I suspect that we won't ultimately, but for now, we're still in this consolidation, still holding all of the support levels, still right at that overhead resistance. And then looking at the daily chart, still bearish conditions here. We've been bearish conditions all week. Since that Thursday candle where we took out the trailing stop, been holding that 34 EMA pretty much all week. That is sitting at 659.21, hit that the last 3 days and bounced every time. We're right in the middle of the range here, could absolutely go either direction, but with that overhead trailing stop, you have to consider that this is likely to be a high, kind of lower high setup. We've been watching maybe a left shoulder head, right shoulder forming, and if this kind of neckline goes in here around this kind of 655 area, then we're probably headed to that lowest ATR band, which is currently sitting at 643.89, 644 area in here, very close to the 89 EMA, right at that 640 area. Moving over to the NASDAQ here, you can see sideways choppy candle as well, up 2.46% after being down 2.7%. Didn't quite make it to the high from that previous candle, but basically unchanged from 2 weeks ago, end of September time period. Held the trend structure in here, tested that area. Is it going to bounce, get the continuation up to this around 25,877 would be that upper trend line. This trend line here came up short of it on this most recent iteration. Doesn't mean that we can't push to it. This week, momentum continues to be stepping towards bearish very, very slowly as we get this kind of melt up price action. RSI, same kind of setup, but it is slightly above the SMA. You can see we've drifted higher. Nice rally on this indicator. Overbought conditions broke down. Retest kind of this area. Lower high setup, not as clean as the SPY charts, but if we get the lower high setup and then you start to see this kind of downtrending price action, more similar to this, usually it goes down a little bit faster than it goes up, but something like this where you get overbought conditions, kind of a retest of this area and slowly get that lower low until you hit oversold conditions. That is kind of the look here, similar to this where you hit oversold conditions and that's kind of a low, hit overbought conditions, that's kind of a high. That is the play, that's kind of what I'm looking at. But looking at the daily chart, again, very similar to the SPY charts, kind of a left shoulder head, right shoulder maybe, still holding this structure in here, highly traded zone there as well, 597, trend structure in here around 596. Momentum still slightly bearish, RSI still slightly bearish. Moving over to the Tasty charts here, again, you have that upper ATR band in there at 612.89. Came up short of that this week, hit it last week and then sold. Is it going to touch that area again? Could. That would take you up to kind of 614, 615 area. Get the continuation. It's been a lot of volume over this most recent run, but the momentum slightly bearish. Volume last week was slightly bearish, but the 8 EMA tagged that level. That was basically the low of the week. Touched that level briefly and then bounced. That was 590.70. Touched that level and then finished bullish on the week. So have to consider that as slightly bullish. But stepping down to the daily chart, very similar to that SPY chart, right? With the sell here, bearish conditions. Bearish conditions are all the way up at 620.86. If we did get into that area and reject, that would be a great setup. And then you'd be expecting a push towards that lowest band around 576.91, 577 area. Again, 89 EMA sitting just below it at 572. Moving over to the Russell here. The Russell once again has rejected from that kind of all-time high level that we were watching from November. That 244.46 level seems to be a very powerful level. We've closed above it one time. That was 3 weeks ago. And then 2 weeks ago was not great. And then this last week here closed below that level once again. Support continues to be 241. Hit that level. Bounced a couple of times this week. Momentum still slightly bearish. RSI similar setup to the S&Ps. A little bit more bullish above the SMA here. But again, almost hit overbought conditions. Broke down, hit the zone. Do we get there one more time before we kind of break down? Or is this the top with that big outside wick taking out all of the levels, generating that liquidity, and then we sold off from that level, closing lower? That is a little bit concerning. It was still positive on the week, 2.36%, but we're still down from 3 weeks ago, down from last week, 2 weeks ago, and then this last week here, like I said, big outside reversal, hit that trend one more time and rejected, continuing to show that this is a major zone of overhead resistance. 9 EMA sitting there, 239.72, but on the daily charts here, you can see looks not great, right? You have that big down candle on the Thursday once again. So you'd have back-to-back big down candles in back-to-back weeks. Friday here, huge down candle, almost 3%, right to this kind of neckline level, 238. And then you tried to rally out. We did, got a slightly higher low here so far, but then you got the big down candle Thursday, gap down in doji. If we get a hesitation candle confirmation down here on kind of the Monday, Tuesday, Wednesday, get towards that 238 level. 55 EMA continues to drift up over the next couple days, and then that structure breaks. Then you're looking for a much larger down move. So just keep that in the back of your mind. The volume has also been ramping at this kind of zone of resistance, momentum bearish, all indicators that signal this is probably done, and I'm just trying to collect a little bit of theta on this before we get that bigger down move. Moving over to the Russell on the Tasty charts, again, we're right at these highs here, right at that upper ATR band was the high of the week, 253.12. We'll continue to probably ride that zone here. 8 EMA continues to be support. We didn't even touch it this week, got close to it and then bounced, so slightly bullish signal there. Buyers are coming in at the low from the 29 September week, and as long as buyers are coming in here on the Russell, I think we'll probably be able to hold support, but ultimately I think we need to pull back a higher low setup, and I would like that to kind of happen around here, around 216, 217. That would be a really nice setup. Touch this low here, touch the trailing stop, touch the 89 EMA, this zone of support in here right around that first lowest ATR band, and then you get this bounce in here, start to rally up to those more aggressive highs. That's what I would like to see. I don't think the small cap story is bearish. I've been talking about small caps being bullish for a while here now, but in the short term, they're definitely extended, and you can see what that looks like here. Hit the upper band, tried to go higher, hit the second band, rejected from there, hit the second band again this week, which was still a little bit bullish, but dipped below the 8 EMA on that Thursday session. Friday, we're right in the middle of the range here. Still bullish conditions on the daily chart, so it is holding up a little better than the others, but right now you have to say this is looking like a topping pattern. Moving over to the Dow has been holding up a little bit better here, up 1.5% just off of its highs here, still above this previous high from December and then January, February of earlier this year. It's holding above that level. It's holding above the 9 EMA there, 458.89. Got the trend in here. It's still holding this structure, held that trend structure bounce, hit the VWAP for a little bit and then bounced the momentum. Still a little bit bearish. RSI still a little bit bearish here, similar to the other major indices here, but either way, you still have a potential for a high, lower, high setup. If we get the confirmation candle down next week, that is going to be very bearish. Moving over to the equal weights here, we had that pretty big head fake 3 weeks ago, 2 weeks ago, big down candle like everything else, and then this last week, we did get a slight retracement. It's right at the highs here from that 24 November candle, still showing the zone of resistance, bit of a head fake here, still zone of resistance. You have to expect that this is a little bit bearish. Momentum step to bearish as well, RSI, same kind of setup, breakdown, potential retest, big volume on that candle. I would suspect that that's selling pressure, people taking profits, people looking for short positions. And then if this gets a confirmation candle down next week, as I've said before, that is going to be a big indicator of bearishness in my opinion. Moving over to the ratios, negative here for the SPY Russell, meaning that the Russell did outperform a little bit. The Russell continues to look good, and I think that'll still be the case, right? You have a big consolidation top, breakdown, consolidation, tried to go a little bit lower, did get bought up a little bit, but the RSI is bearish. The momentum kind of swinging to bullish a little bit. I still think this is going to break down. Similar to the other charts we looked at, 55 is now caught up. We're right at it. I think this will break down, and we'll see a little bit more selling on that. And then on the opposite side, surprisingly, we're seeing the NASDAQ also outperform. So technology, best place to be right now, continues to look pretty strong as we saw momentum stepping back to bullish, RSI stepping back to bullish here. So NASDAQ very, very strong. Russell in second. SPY was actually the worst performer this week. Moving over to the SPY divided by the M2 money supply. Again, very, very bearish here in my opinion, right? We tried to break out, big reversal candle, 9 EMA as your support, came back, hit that key level 30.14, hit that zone, tried to get above it, could not close above it, momentum back to bearish RSI, same setup as everything else, breakdown right to the SMA, almost to the decimal, and then you would expect this to break down a little bit from there. Still looks like a topping pattern in my opinion, much lower RSI. From those previous weeks here, you can see same price action as 15 September. RSI there was a 67. Current RSI is a 63. So you have divergence, weakening price action. You just have to expect that this is likely to go lower. It's sure taking its time. It's probably going to take a little bit longer, but this looks like a topping pattern to me. Moving over to the Mag 7. Mag 7 was up 2.39%. Mag 7 did pretty well this week, especially considering almost hit VWAP there. Still going to take a long time for these to start to catch up. You got the 9, you got VWAP in kind of striking range here, but the 21's all the way down at 342. Maybe we break down to that and then bounce and still get this kind of consolidation, but the 55 is all the way down at 315. So do we wait for that? Probably not. I think it looks more like this kind of a top here where you have kind of a long-term top, VWAP, 9 EMA already caught up. We're probably going to break down a little bit more to that 21. Do we slice through it? Do we get a little bit of a bounce and then a continuation lower, something like that? All the way down to that 55 EMA. Could take a couple of weeks for that to happen, but either way, I still think this is kind of a broader topping pattern. You can see you start to get that bearishness, a couple of weeks of bearish. Still took another month, almost month and a half before this broke down. So this could still take a little bit more time here. Another month, month and a half is certainly a possibility. But either way, during that time period, you were still not breaking out to new highs, still holding the lows during that time before you had the bigger breakdown. Moving over to Apple and Microsoft here, both on the weekly charts, you can see Apple was up about 2.86%, still watching that overhead resistance at 260. Maybe we get the push to it one more time. Maybe we hit this trend line on the kind of retracement. That is what we were looking at kind of all week. Breakdown, kind of retest of the structure, and then a bigger sell. Still have plenty of time for these EMAs to catch up. It's probably going to take several more weeks before you see an Apple sell, at least on a major basis. And then looking at Microsoft, similar thesis, right? We've been waiting for this 21 to catch up. It's getting very close here, maybe 1, 2, 3 more weeks. Get that 21 to catch up into this area around 513, pretty much current price, and then we would expect this to break down at least a little bit. Already have kind of a high, lower, high setup. We get a low, kind of lower, low, or a double bottoming pattern in here around 495. Certainly possible that Microsoft just continues to kind of go sideways for a bit, buying the lows and selling the highs. Seems like a good thesis, at least for now, on Microsoft. Moving over to Tesla and NVIDIA. Tesla here up 6.24%. Really, really strong week here. Again, I've been saying that I think Tesla is probably going to go higher here. I think it's probably going to push towards 500, towards these kind of wicks in here around 467, up to this kind of 487 area, back towards the highs from 3 weeks ago. Looks really, really good. Continues to see pretty strong buying. Didn't have massive volume on the sell candles either. You can see there is a lot of volume here, a little bit higher than the previous weeks, but prices held in there pretty well. I think there's probably a little bit of room to the upside on Tesla. And then NVIDIA here, still holding the key support area, still has this 21 that's going to catch up over the next couple of weeks. Could take kind of to mid to end November before that happens. We'll see how this plays out right here, but this kind of looks like a left shoulder head. Maybe we come down here, get a bounce from the neckline, right shoulder, and then we kind of top out here. Not that I think NVIDIA is going to crater by any means, but you can absolutely get these kind of larger pullbacks. You can see this here. This was about 40%. I don't think it'll probably be like that unless we have a major shift in geopolitics, but I could absolutely see maybe a 20, maybe as high as 25% into this kind of zone here. Retest this area. Buyers will come in, start to push this back towards the 200 area, potentially. Of course, if you can get back above kind of 183.97, 184 area, we can close above that. Then you can kind of look for a bigger continuation higher, potentially. But right now, this kind of looks like a rising wedge, which will ultimately sell. Moving over to Meta and Alphabet here. Meta continues to be in this kind of, you could argue maybe bull flag, but it hasn't really done anything to confirm that it is a bull flag at this point. Kind of just looks like it's drifting lower, but 55 EMA could be support, 650, 92. That would be quite a bit lower from current price. Momentum still a little bit bearish. It did kind of hold a structure over the last 2 weeks. Still need to see it break out. Alphabet, on the other hand, does look a lot more bullish. You can see 4 weeks of consolidation here, breakout candle this week, and we looked at the daily chart on the kind of Thursday, Friday videos, broke out, retested, looking for a continuation higher here on Alphabet, might flip pretty bullish on Alphabet, looking for some more pushes, which of course would be all-time highs. So no real price targets. That was 14% in. That seems a little bit aggressive. If we did get 14%, that would take you to 290. I suppose it's not impossible, but if we do get the breakout here, I think there should be some strong movement here on Alphabet. Moving over to Amazon and Broadcom here, you can see Amazon selling off to that 55 EMA. This is kind of leading the pack in terms of that kind of retest structure that we've been talking about, right? You had the breakout here, had the EMAs catch up, got the breakdown here to the 21, had a little bit of a consolidation, retested the 9 EMA and VWAP, and then sold off to the 55, and my level here, 212.25. So that's what we're looking at right now. This looks quite bearish. If this structure goes here, got trend support here at 207, otherwise 255 cents is kind of that next zone. Keep in mind, you do have this gap left from May, massive gap here, continuation run. Do we get a pullback to that gap fill around 191 to 194? I think you could absolutely make a strong case that that is in the cards over the next couple of months. I don't think it's going to happen immediately here, but if you're looking for that, I think that's a good thesis. Momentum bearish, RSI bearish, good volume on the sell. Doesn't mean, like I said, that it'll go in straight line. You'll probably get some kind of a bounce, something in here before you get that gap fill. But I do think that that is probably going to happen at some point. And then Broadcom, This looked pretty strong during the week, and it was positive, obviously 7.6%, but this still kind of looks like a high, lower high setup for me. Momentum fading, RSI kind of looking like that same kind of setup, right? Super high peak level around 80. Breakdown, come up for a retest or a lower high setup in here, ultimately getting that bigger move down. Moving over to staples and discretionary. Staples had a great week, up 2%. Huge candle here, pushed towards that 9, hit it almost to the penny at 79.74. My level there, 79.90, came up just short of that. Either way, this looks like a strong base and a rally out. Momentum stepping to bullish on that first week. You would expect several weeks of this. You can see when you get that first week, several more weeks. Do we get all the way up to here around 84? Hard to say, but I do think there will be more bullishness to come. I think this is clearly risk off markets with that big closed on the high, looked really, really good. And then looking at discretionaries, it still was positive, 2.48%. Came up to that zone of resistance here and then sold though, right? So you have the breakdown, kind of the retest of that key level, 235.85. If we reject from here, confirmation candle down, momentum flips to bearish, RSI bearish, then you're looking for 277, 21 EMA should be somewhere in there in that same area, and then we'll see what happens after that. Moving over to 20 and 50-day breadth here. Breadth actually held in there pretty well. We talked about it during the week, and on that Friday video, breadth bounced on Friday. A little bit of a move there, 47.1%. The percentages are a little funky, right? You came from 28, went up to 40, got all the way to 50, and then rejected from there. Momentum is still bearish. RSI is kind of still neutral here. Structure is still drifting lower. We have not hit those kind of critical levels where you would say, okay, there's some kind of a bottom in yet. I think this will go at least to 16 at some point, maybe as low as this kind of 4 to 7 range in here. That would be interesting. That is usually about as low as it goes. You can see over the broader time frames. Anytime you get in here between 4.5 and kind of 7, that is usually a pretty decent bottom for a couple of weeks, and we just haven't had that yet. So I don't think the bottom is in by any means. I think there's a bit more selling to go. The 50-day chart is not nearly as clean as the 20-day chart. You can see there's definitely lows at various levels. Either way, though, kind of 26 is kind of a zone that I like to look for. You can see it here, September, touched it again February of 22, went way lower in June of 22, way lower in September of 22, and it certainly can go lower, but you can kind of see once we get here, you could argue the bottom is not too far away. Same here, March of 23. Same here, October of 23. Again, going a bit lower down into that 10 range before we have kind of the bounce out. Similarly here between this kind of 15 and 22 area, 26 area, got a nice bounce out a couple of weeks before we did get an ultimate move. And if we do get a setup like this, right, you're looking for a big sell to here, somewhere in here, get a lower high setup kind of like this, ultimate move kind of towards that 4 to kind of 10 range. Anytime you're below there, that is usually indicating that the low is pretty close, maybe not true bottom immediately, but pretty close, and panic is pretty well set in at that point. The momentum is still bearish, the RSI is still bearish, so signaling bearish, not at critical lows yet. Moving over to 200-day breadth, very similar thesis, right, where you get these kind of longer drawn out dips. On 200-day, it's a lot slower moving chart, and as you would suspect, this is kind of lower high, lower high, lower high setup, waiting for this kind of bigger roll down. Same kind of thesis as 50-day. You kind of have 24 to kind of 36 area is where you're starting to get close. Similar to what we saw here in April-May time period before we got that rally out to this lower high. Still expecting this to kind of sell to this 30 to 36 area at a minimum. Does it go in a single shot? Hard to say, but either way, momentum is bearish, RSI is bearish, not at a critical low level. I think you get a couple of weeks of selling here pretty soon. Moving over to the dollar continues to stay pretty bullish in terms of structure here. It was bearish on the week, down just 0.33%, but it came in, tagged that 21 EMA, tagged the 9 EMAs on the weekly charts, touched those levels, held support, and now if we get the confirmation up candle, that's going to be really, really nice. Momentum bullish, RSI still very bullish here. Still looks like a solid base on the dollar, looking for this to go into this kind of range here between kind of 101, 104, potentially as high as 109. That would be interesting. But either way, this looks like a solid base. It's taking a sweet time to roll to the upside. Last time we had something like that where you had kind of a long-term base, we had a massive rally over the next couple of months, which ended up being about 27% from June until October. Is it going to be something like that? Obviously, it's hard to tell, but I do think that there will be some bullishness. Go ahead and extend out that trend line there. That gives you a target, like I said, kind of 102 to 103 in this area here. Moving over to JNK and TLT. JNK had a nice bounce up almost 1%. Momentum still bearish though. RSI still bearish though. Still kind of looks like a topping pattern, left shoulder head, maybe right shoulder forming in here. Either way, it's not going to new highs, still not above the level 97.69. Did find some support, 96.51. Maybe we get another consolidation dip low, kind of like this. Anything in here is probably a buy, anything around kind of 89 to 91. Do we get that low? Probably not, but I would expect a pretty solid dip low on as kind of a risk off signal over the next couple of weeks as we start to see that selling come through, which I do think is going to happen. And then this looks very similar on TLT relative to the dollar. Very nice base over the last couple of weeks. Got a low, retest to the low, nice consolidation, higher low setup. Breakout this week on a weekly basis, expecting this to go at least to 92.82, 144 EMA sitting there, 93.66 in this area here. Ultimately, I do believe this will go back to $100 at least. Moving over to the VIX, got the spike up to the 28 area. That's what we were looking for this week. Sure enough, hit that level and then rejected from there. Momentum still very much bullish. I don't think this is the end here by any means. I think this is just the start. Got a nice spike up. You can see here, hit that level. Next week went way high. I don't know if it'll be that, or is it going to be something more like this, right? Where we get a spike up to that area, pull back, consolidate, another spike to that area, pull back, consolidate, spike up to that area, where it's just kind of grinding here for a little bit. You're not getting major moves, but volatility is in the market. Solid base kind of looks similar to this. This was a longer term base before the spike up, but either way, there's clearly a rounding here, push to that level. I think we get a higher low setup of some kind, or we just spike through. Either way, I don't think this is done by any means. Moving over to my accounts, I was down a little bit on the week, which is a little frustrating. Markets were bullish this week. I should have been positive, but I got whipsawed a little bit. It's pretty wide-ranging candles throughout the week. Quite a lot of volatility, even though we didn't go lower. Otherwise, looking at these positions, got 3 days here. This is a Tuesday expiration for the Russell. I don't think it's going to hold up too much longer than that. I think we'll see some selling next week, even if we don't get the major moves lower. I still think there's a couple of weeks potentially before we start to see those major breakdowns, but this is for Tuesday. Want to collect $2 credit here. If these go away, no issues at all. And then same here for the Qs. 4 days from now at 600, that's already in the money. $11 credit on that, already in a small profit. If this goes away, no issues at all either. Want to start to take profits on these bullish positions. Like I said, I don't think it'll last forever. TLT bullish here at 91.14. I think this will go quite a bit, like I said. And then looking at the dollar, still long dollar, still 60 days or so till expiration, 28 on this indicator. I still believe this is going to go quite a bit higher over the medium to long term. Let me know down in the comments section what you think of quality stocks. Are you looking for dividend payers? Are you still buying high flying tech stocks? Are you still looking for growth? What are you buying, and are you trading, or are you long-term buying and holding it? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.